Hello there traders, in this video we're going to talk about the manipulation candlestick pattern for entries. So let's begin. Before we begin guys, you have to understand these 6 videos over here because these are going to be useful. You can go and watch them. The link will be in the description below. So let's move on. And also please read the disclaimer before we can continue because I know I'm not a financial advisor or so forth. Please read this before you can continue. So this video is going to benefit you with how to read price action even in difficult situations. How to make entries using this manipulation candlestick pattern. Reading candlestick patterns will become way much easier. And then the topics that we are going to cover in these videos are introduction to manipulation candlestick patterns, how to use and when to use this manipulation phases in the market. And for a bonus, we are going to include 26 examples so at least you can understand this concept. And also the free Telegram and the Discord will be in the description below. You can also find this whole PDF in the description below. So let's move on. We all know we have the banks and then the hedge funds. This here is you, the retail trader, and then this is your trading strategy. Let's say for now you are looking to go long around this area, predicting that the market will eventually shoot to the upside, and then obviously you will put your stop loss maybe around here or even here. But then the market decided to give you a little bit of a profit and then drop lower to break this low and then again drop lower to stop you out and then price shoot to the upside. Then all this money goes back into the banks and hedge fund managers, those people with real funds, not us. Okay, so let's move on with the pattern of this manipulation phase. For the bearish setup view and the bullish side of view, the first candlestick here on the bearish side, this bullish candlestick here, we have to see a bullish candlestick first. This is your first candlestick, and then on the second candlestick, this candlestick here has to be bearish, and then on the third one, this candlestick here has to trade above this high or this high. That's when you can say this one is correct. Sometimes it cannot even trigger this high. This candlestick will end around this area. Okay, this one here is when you're looking to go short. That means you'll be looking to trade this candlestick here for the move to be to the downside, and then it's the same thing vice versa to the bullish side of view. Firstly, we have to see a bearish candlestick here. The first candlestick has to be a bearish candlestick, then followed by a bullish candlestick, and then on the third candlestick, this candlestick has to trade below this low or this low. Then you will be looking to enter when this candlestick closes and then look for price to shoot to the upside. And another thing that I want to point out is that here we can see that, let me show you the rules. We can see that we have this low. Price didn't trade below this low here, but it decided to trade below this low on this third candle. Sometimes yes, price can stop around here and then we have another fourth candle here, the bullish candlestick, and then on this 4 and 5, on this one is the one that can do something like this. Then price will suddenly shoot to the upside. And another thing that I want to point out is that sometimes when you see something like this, here you see the open here can still be our entry point. Like for example, like this, you see that this one here, let's call it a confirmation candle. So you can still put your buy limit order around here, the market is likely on this next candlestick, the fourth one, is likely to come and tap here and then shoot high, but your stop loss will be around here. This is your stop loss. Even on this side here, when you enter, your stop loss will be here. This is your stop loss area, and then you can look to enter here or on the close here, or the close or retracement or retest maybe. Then this candlestick that will open here is likely to come and test this open here and then continue to move to the downside. I hope you understand this concept, but obviously we have a lot of examples to show. So let's begin with the first one here. We have example number 1. This is a continuation pattern. I'm sure most of you have seen this pattern when you're studying Elliott wave or something like, I don't know, maybe let's say maybe you're using order blocks or something. You'll say this is your order block area around this area here, or maybe a supply zone around this area. This is your supply zone. So then you can see that we have this high, we have this low, then price trades above this A point here. Firstly, like as I said before, we have to wait for a bullish candlestick. We can see a bullish candlestick, and then we can see this bearish candlestick that did not trade above this high here. So this one here, this next candlestick should trade above this high. I hope you understand me. This candlestick here has to trade above this high or this high here before we can consider a short position. And said when the market closes here, you can still move on to the lower time frame here and then look to go short, because we already have the confirmation that the market is likely to move to the downside around here. So that's what you should do. Okay, so let's move on to the next one. We have example number 2 over here. We can see price is at the support and resistance level. Here you can see that we have a bearish candlestick. The next candlestick did not trade below this low, so that means we have to wait for the next candlestick, which is the third one. So you can see this third candlestick here traded below this low here, so that means this candlestick here is your confirmation candle. So that means you will be looking to enter long here, put your stop loss around here. Okay, it's the same thing as on the side. This is your strongest resistance area here. We can see we have a bullish candlestick here, and then we have a bearish candlestick. This bearish candlestick did not trade above this high here, so that means we have to wait for the next candlestick to at least trigger those entries around here. Put people in a stop loss here, because most people will put their stop losses around this high here. Then when this candlestick closes, that's when you will be looking to enter short in the lower time frame, and then you can enter here and then catch this move. Even if, like, let's say you are on the daily, that means you'll be looking to enter short, maybe let's say maybe in the 1 hour or maybe the 30 minutes. That's what you should do. But then we can also see around here, you can see that we have a low and then we have a low, but this candlestick did not trade below this, so that means we don't consider this one. We avoid it at all costs. And then we have this one here. We can see it clearly, but it's not clear enough. We have a 1, we have a 2. The third candlestick, it did trade below these 2 lows, so that means you'll be looking to enter long here, or even in the lower time frame you can still look to enter long, and then that's why you see the market shoot to the upside. So let's move on to the third example. You will understand clearly even when we move forward. This is pretty much simple to understand, but it has a very huge potential for you to be a profitable trader. Okay, so this is example number 3. This one here, we can see a failed supply zone here, and then here let's look at price action clearly. We can see that we have a bullish candlestick, and then we have another bullish candlestick which looks like a doji or something like that. But the bearish candlestick, did it trade above this high here? No. So let's mark it. You will mark it like this: the low, the high, the high. Then on this third candlestick, price closed bearish, so that means you will mark this low here. In the lower time frame, you'll be looking to enter short here, so that you can catch this lows here. You'll be looking to enter short around this area. Okay, so let's move on to example 4. We have this example 4 over here. In the market, there is no right or wrong in trading. Whether you are right or wrong, the market will always make its own decisions. So you can see that we have this low, we have this low, then this bullish candlestick closed bullish. That means you'll be looking to enter long here, and then put your stop loss below this low. But then on the next candlestick, the market just bullied you and then stopped you out. So you just have to use proper risk management if this thing happens to you. So we can see right now we have a high around this area, price traded above this high. But then let's say you are looking to go short here. Where are you going to put your stop loss? Let me write something. How are you going to make your entry here? An entry, a stop loss, and then let's say maybe your take profit. This is the things that you need to understand before you can enter the market. So for now, you can clearly see that we have this major low here. This week here, you can still target it, and you still have a huge fair value gap around this area here. So let's read price action from here. How are we going to enter from here? The pattern will still stay the same as always. That's one thing you should understand. So let's erase this. We have a bullish candlestick, which is number 1. We have a bearish candlestick, which is number 2, and this bearish candlestick must not trade above this high. The second one, and then the third one, we have this one here, we have the third one here, which traded above the high of number 2. So that means this is your confirmation. You'll be looking to enter short here, put your stop loss above, and then ride this trend to this low, or even to this lows here. That's everything that you need to understand. You can still end the video here and go and backtest, but we still have more than 20 examples to go over with. So let's clear everything and continue. continue. Let's look at the market. Here we don't see anything. Here, no, we don't see anything. We don't see anything here. We don't see anything here. We don't see anything around these areas. I don't believe so. So that means we don't have everything here. And then okay, we see another one here, which is not bad. You can see we have a low, and then this is your confirmation candle, the third rule. Then you can enter and then write this one. Maybe you could have put your trade to break even, but only if you have entered on this lows here. That's all from this example. Let's move on to example number 5. We have example number 5. We can see, let's look at this area. We don't have anything. We don't have anything. Let's look around this area here. We have a bearish candlestick, a bullish candlestick. This bullish candlestick, did it trade below this low? This is your first candlestick. The second one here must not trade below this low. Then we have this. Then you mark up your low. Then on this candlestick here, you can see that it traded below this low of number 2. Then on the third one is your confirmation. After price has traded below this low and closed bullish, you have to understand that closed bullish. Then another thing that I have shown you before is that you can use the open here as your buy limit order so that you can catch at least some few pips here. You can see that you can catch this. Rather than entering here, you can enter around these areas here or even here. So that means you will be gaining this much to the upside. So you can see like this thing is pretty powerful, but you have to understand it so that it can be much easier for you in the future. It's not that difficult to understand. This one here is not good. Let me show you why I say this is not the perfect pattern. You can see we have a low, we have number 1, we have number 2. This is a bullish candlestick. We mark the low of number 2, and then we don't have a bullish candlestick here. This is a bearish. So you can see these two things here are way too different. So that means you have to avoid such things. Okay, this one you'll just avoid it at all cost. And then we have another one around here. Let me clear everything. It can be clean. Here we can see we have a bullish candlestick, which is number 1. We have a bearish, which is number 2, and then this bearish candle here still traded above. It looks something like this, even though it's very small. The other candlestick is just very small. They look something like this. Not too much, but it did the work. That's what we need. So let's move on to example number 6 so that we can finish this video very fast. This is the things that you need to avoid, incorrect ways to do it. You can see we have a bullish candlestick, but still it traded above. You can see that there is no candlestick that traded below this lows here. So you avoid. Here we can still see the same thing. Here. You can see we have 1, 2, 3, 4, and 5. So avoid. Here we can still see the same thing here. You avoid, but you know this candlestick here. All of you know this candlestick. If you have previously watched the previous video, even here, you know this candlestick pattern. Okay, you already know this candlestick pattern here. You know how to trade this one. If you don't know how to trade this one, then I guess you still have a lot of things to learn from this series that I've been making for the past several weeks. So let's move on to example number 7. Example number 7, we have, let's look at these areas. We don't have anything. Wait, there it is. Let me show you. We have a low 1, have a low, which is number 2, and then the third candle that traded below number 2, which is this one, the third one, and it closed bullish on top of that. So that means on this fourth candlestick, you can still try to put your buy limit order on here, and then when the market retraces back with this candlestick, you will be looking to go along around these areas here. You'll be looking to go along, and look, the market shoot to the upside. But then after this week here, we can see that price also did the same thing. Let me show you, but this time it did on the fourth candlestick. You can see we have a high, which is number 1. We have a high, which is number 2 on the second candlestick. We have a high on the third one right now. This is a complete rules. But then the market decided to trade above this high, and still closed bearish here. So that means you can still ride the trend from here, but your stop loss should be above this high of the one that manipulated the highs. Then you can still ride this to the downside. That's how simple it is. You can still even see it from here. We have a low 1, have a low 2, have a low 3, have a low 4, and then on the fifth one here, 5. The market manipulated the fourth low here, but still, let's say you made a retracement around this area. Your buy limit will be here. Then your stop loss will be be here. Then you ride this trend to the upside. I'm not sure if you understand me or not. So, but I guess for now, let's leave it to at least 1, 2, 3, 4, and 5. From here, this is your end, the end candlestick. You can still start from here and here. That's what I am telling you for now. So let's move on to the next example. If you're enjoying this video so far, please consider subscribing to the channel and like this video, share it with your friends and family, and also download it and keep it. And also, if you want this free PDF, you'll also find the link in the description below. You'll find PDFs from videos in Gumroad link, so go and check it out. So let's move on with this example number 8. This one here, if you know, let's start from here. You can see everything right now. I believe you can see it clearly. 1 low, 2 low, third candle must break number 2 low, closed bullish, and then shoot to the upside. That's how simple it is. And then from here you can see we have a high, 1, 2, third candle must break the high. You can see price shoot to the downside. But if you have watched the previous video, that means you know how to manage this trade based on this candlestick alone, because you already know this is a rejection candle. So let's look at this one here. You can see we have a low 1, but here you can see I made this on purpose because this one here is just a rejection candlestick. This one here will be on another video where I explain this clearly, but you can see that we have a rejection candle, but on the second candle and the third candle, price manipulated the second candle's low and closed bullish. That's why you see price shoot to the upside. And also here you can see that the market was just shooting to the downside, but if you look closely you will see the pattern clearly around here. We have number 1, let me clear everything, it will be clearer for us. Around this area here you can see we have 1, a high, 2, and then on the third candlestick here we can see price trading above the previous bearish candlestick's high and then closed bearish. So that means you will be looking to enter the retracement here in the lower time frame and ride this move, and you can clearly see it just a retrace back a little bit and then it shoot lower. Okay, that's what you need to understand only just 3 rules on the candlesticks. It's just pretty much simple for you to understand, I guess. But let's just continue with the next example, which is example number 9. We will follow the same rules until this thing is in your head forever. This one, it might not be clear, but we can see we have this bullish candlestick, have a bearish candlestick. Did this bearish candlestick close above this? Did it trade above this high? No, but this one traded above this bearish candlestick's high and then closed bearish. That's why you see this market was trading to the downside. It traded to the downside, and then that means you'll be correcting your profits around these areas here. And then here we can see a failed one here. We have a low. Let me show you. We have a low, then we have this confirmation candle, but price after this candlestick here, it just shoot lower. So that means your stop loss will be hit. So it's just part of trading. So let's move on to the next example, which is example number 10. So far we're still left with 16 examples, so just bear with me so that we can finish these examples. I want you to understand this. Once you understand this and once you see it, you will never unsee it forever. You will always look at the market the different way. So let's look at example number 10 here, because right now you already know how this market behaves. You have to right now think outside of the box. So we know that we have this low here, low, which is number 2. This one here is number 1, the low, and then here we can see the third candlestick, which is our confirmation, which also traded below this low of number 2 and then closed a bullish here. But because you don't want to enter around here, because you already know your stop loss will be around this area, you can still put your buy limit order around here, and then your stop loss will be this thing. That means this is the pieces of your stop loss. Then you'll be looking to ride this trade. This is like 1:2, I don't know, maybe 1:40 or something like that. But you have to think outside of the box. And then we can also see another example around this area. I know it's not clear enough, but this candlestick here, this is this one here. You can see we have this, this thing is not clear. We have this high, which is number 1, is this high here. We have another high, which is number 2. We have another high, which is number 3. But on number 3, price did not trade above this high here. It did on the 4th candlestick. So that means you sell here on the close, put your stop loss here, and then ride the trend. You can see you enter here on the close, put your stop loss loss here, and then just ride it to the downside. That's how simple it is to understand this concept. And for those who were watching my videos, you know how to buy from here. You already know how to buy this thing. You already know how to buy this thing here. You already know how to buy around this area here. I hope you understand it. Let's cross the 10th example to the 11th one. From here, just take a moment, or maybe you can pause the video and look at this thing and find the reversal point that you could have entered around these areas. There's a lot. I mean, like, I can show you only one. The rest you can find them on your own. Okay, let me show you the first one. I'll just do low 1, low number 2, which is the low, have a low, 3, low, third one, low. But then on this fourth candlestick here, price traded below this low of number 3, and then price started to shoot to the upside. You just put your stop loss here, guys. You don't have to put your stop loss here. It's not necessary. Why would you risk too much if this thing is giving you a confirmation so far? You don't need to stress yourself too much. Okay, let's move on. You'll find more examples on your own on this chart. There's just, I think, one. You'll just find it. Let's move on to this example number 12 right now. Example number 12. You can see price was shooting to the upside, was shooting to the upside, shooting to the upside, upside, to the downside. But where's our entry here? You can still pause the video, but it's around this area. Let me show you. Here is our reversal point. We have high, which is 1, high, which is 2, and then we have number 3, which is the high 2. And then on this candlestick here, price really above the second candlestick's high, which is still bearish. If we had a bullish candlestick here, everything will change around this area, will change. And then here we can see that after this candlestick closes, we can still look to enter on the retracement. You can put your sell limit order here, sell limit, and then put your stop loss here, and then you can target, maybe at least you can see that we have this fair value gap around this area, and then you can target, or maybe target this low. You can see this is your profit, and then this is your stop loss. That's how you should do things. Okay, it's supposed to be like this. Very simple and very effective. You don't have to put anything on your chart so that you can understand this thing. It's pretty much simple. You just need to understand only a few candlesticks, then you are done. But this is just scratching the surface of this pattern here. If you want more detail about this thing, just need to contact me on Telegram. I'm the admin there. Then I can show you everything so that you can understand better. But it's not going to be free though. We have this trend here. We shoot to the upside and then we shoot to the downside. But how are we going to buy or even sell? Let's say maybe the market right now is shooting to the upside. There's nothing. Are you sure about that? There's a continuation pattern here. Let me show you. We have a low, even though the market was not coming to the downside. The market was still bullish, but this is just a continuation pattern, because someone will see this a hammer candlestick and still try to sell, but then suddenly they will just be stopped out. Then from here we can see that we have a low 1, 2, and then we have this low, the third candlestick, and then on the fourth one here, the market closed bullish after trading below this candlestick's low, and then the market shoot to the upside without even stopping. If someone was not using a proper stop loss after looking at this hammer here, they will be like literally being stopped out. So that's all I can say from here. This one is a little bit complex, but I guess I'll just skip it. And then we have another one here. We can see it right now, and I guess you can see this pattern. It's not clear. We can see that this candlestick and this one, they have different lows. This one here traded below the bullish candle's low, then the market was shooting to the upside until we had this move, this aggressive move here. That's all I can say. Let's move on to another example. Example 14. We are moving so fast, I guess. Let's look at how price behaves. This one we don't see, and okay, we see it here. Can you pause the video and see how the market shoot to the downside? You can clearly see that price, we have a high which is 1, have a high which is number 2, and then on the third one, what did price do? It traded above both number 1 and 2 high. So that means this is your confirmation. So you will be looking to enter short here, or maybe wait for a retracement around this area. Put your stop loss here and then just ride this trend. If let's say maybe you are riding this trend here and then you see a bullish can close, you can still close here when this candlestick close bullish, because you will never know. That's why you see the market shoot to the upside. It will happen most of the time. This one's here, I'll just cover it on the upcoming videos. You can see it's a little bit difficult here, but I'll just cover it on the next coming videos. And then let's see, we have this this bearish candle, we have this bearish candle, we have a low, which is number 1 here, which is number 2 here, and then we have a low, which is the third one. And then on the fourth candlestick here, the fourth candlestick, it traded below this third candlestick and still closed bullish. You have to remember that, closed bullish. The first low is different here, then the second, the third, and even the fourth one has to be bullish. If there's a different candle in between, avoid that, just avoid it at all costs. So let's move on. So you can see you enter here, you enter around this area here, let's say stop loss here. Then you can see, ooh, too much profit with this candlestick. After this, especially if you see this kind of moves here in the market is likely to come and make some silly moves. Okay, this one, I guess you already know how to trade it if you have watched the previous videos. Let's move on to example number 15. Don't worry guys, we are almost there. We'll be finishing up these examples very soon. We can see this one, there's nothing, but you already know how to trade this one. And then let's look at this example here. This one is pretty much interesting here around this area. We have a high and then we have a high here, but then this next candlestick traded above this candle 1 and candle 2 and then closed bearish. So that means you'll be looking to enter here, put your stop loss above. That's all I can say. And then that's why you see the move to the downside. You can still target maybe TP around this areas here, maybe TP around this areas here. Always target this lows here because most people will be looking to buy from here, and then you just ride it to the downside. So let's erase everything and then move on. For now, there's nothing I can see here. There's literally nothing here. There's nothing here because this bearish candlestick here traded below this low, but it closed bearish, not bullish. Okay, that's one thing that you should avoid from here. I guess there's nothing I can see around this areas, here. There's nothing. There's literally nothing that I can see. If I see it, I could have shown you before. But then let's move on to another example. We have example number 16 here. We have example number 16. This one we will avoid because this was covered in the previous video. And then we have this example here. We have a low, we have a low, which is 1, 2, 3. And then on the fourth candle, we can literally see that it traded below this low here. Okay, so that means this is also your confirmation candle around here. So that means you'll be looking to enter around this area or maybe with a retracement and then put your stop loss below this low and then wait for the market to shoot to the upside. That's all here. And then we can also see another one here. We have a low of this thing that looks like a doji or something like that, or indecision candle. We have this one here, and then we have this candlestick here, and then you put your stop loss here, then just ride this trend to the upside. That's all that you need to understand from this video. So far, if you understand this thing, please consider subscribing again to the channel and also leave a like and a comment below so that we can provide more videos like this one. And also let's move forward with the example number 17. We have a bullish trend and then a bearish trend and then a bullish trend. Here we can see that we have nothing around this area. We have literally nothing around this area. But then look closely here around this area here. We have a bullish candlestick, which is the first one, because the market right now is trying to shoot to the downside. We are looking for a sell position. We have a high here, which is number 2, and then we have this candlestick here. It traded above this high here and then closed bearish. You put your stop loss here, ride this move to the downside, target this low. That's how simple it is. And we have another one here. We have this bullish candlestick. We have a bearish one that did not trade above this bullish candlestick's high. And then we have this candlestick here. It traded above both highs, and then you just enter and then ride the trend to the downside. That's how simple it is. I hope you understand what I am saying here. If it's a little bit difficult, it's just that because I have all the rules plotted down. You have to, at least when you are trying to make a trading strategy, always make some rules for it so that it can be a little bit challenging. Or maybe when you are backtesting, if you see something that is not working out, remove it and write that rule down. If something that is working, improve it so that you can improve it even further in the near future. So let's move on. Oh, this one is messy. We have a sideways market. We have the market that is trying to push the upside, but then suddenly it dropped. This candlestick pattern, it will always show you the direction of the market. Always. Just look at how the market behaved around this area. Around this area here and around this area here. You can still see some sell positions. Here we have a sell position, but then let me show you, because this video is not based on other strategies. We are focusing on the candlestick that is based on this video. So let's see, we have this high here. Let's say maybe this is your resistance area. Then let me remove this here. We have this a high of this candlestick. We have this high of this minor high, but the market tapped the high and then closed bullish. We avoid this kind of thing here. Here we can see that the market tried to shoot to the downside, but then that's how it goes. Sometimes it cannot give you the same result as always. But here, let me show you, we are not done yet. You have to be patient enough. Then we have this high. Then we have this high. We have 1, a 2, and then where's the third one? Oh, the third one is this one here. So that means the market, after making this, the market just dropped to the downside. I know some of you will be saying that, oh, this thing won't work in a real market, oh, blah 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 blah. But come to our Telegram. I'm always using that thing to make before and after. I always share trading setups. If you want to blah 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 me, if you don't have anything to say over the internet, just know that I do not care, bruh. I do not care. I don't even know you. So I'm doing my things. I'm trying to teach you because you're still using some indicators. So anyways, even though I still love you, bro. So anyways, let's move on to the next example, which is example number 19. Let's look at here. What happened here? Okay, we can still see it. The same, guys, this structure happens all the time. You can see we have a bearish candlestick. No, let me do something like this. We have a bearish candlestick low, which is 1. We have a low, which is number 2. And then on the third one, you can see that price closed bullish. And then you just put your stop loss here, enter around here, or maybe on the retracement, and then ride this trend. That's how simple it is to understand this concept. And then you see this one here. I'll cover it in the next coming videos, maybe around next month or so. We can also see it around here, but slightly lower. This candlestick did not even, like, the price different is not that different. You can also see it around here. Have a bullish candlestick, a bearish candlestick, and then price trade above both highs and then close bearish. That's why you see a move to the downside. This one I'll just cover it in the next coming videos. So I guess let's move on to example number 20. Example number 20 is just the previous example, guys. I forgot. I put 2 examples in one, but it's still the same. I can still explain it again so that you can understand it. From here, we have, let's say we have this low, which is number 1. But look at the next candle. The low traded below this low here, this bearish candlestick. That means this one is wrong, okay, for now. So this one is wrong. Let's find a number 2 that did not trade below this low here, because even if you enter around this area here and put your stop loss, yes, you still be safe, but for me it doesn't work like that. Then look at this one. We have a low, which is number 1, and then this low here, the number 2, must not go below here, below number 1. All you need to do is to focus on different candlesticks, but the second one and the third one and the fourth one, this one is to be different. This one here, they have to be the same in color. This one will be the different one, the same in color. This one, but this one here must not trade below this one here. This 1 and 2 must not trade below. Number 2 must not trade below here. And then third one is just confirmations here. I hope you understand me. Let's start. We have a low, we have a low. Third one, 1, 2, and 3. Third one, it traded below this low, closed bullish. Then you confirm, put your buy limit order around this area. When the market retraces, you ride this trend to the upside. Then you are done for the week or month. So let's move on to example number 21. This one here, we can see pretty much simple. Let me erase. You can see we have a bearish candlestick, we have the second candlestick, and then we have the third candlestick. But this candlestick here, you can see we have 1, 2, 3 candlesticks, and then on the fourth one here, the fourth one, price traded below these 2 lows. So this one confirms. That's why you see price shoot to the upside like this. And this move was just a studying trend of some pair. You can write it in the description below if you know which pair it is. And then from here, you already know how to trade this one. You already know how to sell from here. You already know how to sell from here. You already know how to buy from here. This one is not valid because you can see that we have a bullish candlestick after this high. It's different to this one. You already know how to sell from here. So let's move on to example number 22. Example number 22. We have this candlesticks here. Let's look, we have a bullish candlestick, a bearish, and this one. What can you see from here? The second candlestick, remember guys, it must not trade above this bearish candlestick, the bullish candlestick's high. That's one thing you should know. It must not. And then this third candlestick here should trade above the previous candlestick's high and then should lower to the downside. That's one thing that you should know about. And then let me see, do we have another? Yes, we do have another one around this area. We have this candlestick here. Let me start. I will avoid this few candlestick. You'll understand the rules of this strategy or something like that. We have this high. Let's say this is number one high. We have a high which is number one, and then we have a high again which is a bearish candle which is number two. But then look at this candlestick here. It's the third candlestick and it traded above this candlestick's high, but it did not close bearish. So that means you avoid this kind of thing. So let's start again. We have a high which is number one. Again, we're starting again. We have a high which is number two, and then we can see the third candlestick, the third one traded above this and then closed with a bearish candlestick. That is why you see this trend moving to the downside. But you can see, but if then you chose this one and then you sell and then you put your stop loss around here, you sell around here, so that means this candlestick could have easily stopped you out, and then you will see the market shooting to the downside and you'll panic like crazy. This one, let's see here, we are looking at this area right now. We have a low, we have a low. This candlestick traded below the two lows and then closed bullish. You can see price was just shooting to the upside. Let's move on to another example because I don't see any pattern here anymore. Oh, we can still see another one here, but it's slightly not too much. We can see low, low. This candlestick confirms, put your stop loss below it and then you ride it to the upside. Simple as it. It's just simple. Let's move on to example number 23. Here, let's look at it. We can see here same pattern over and over again. Same pattern over and over again. Have a high, one, two, third candle. Where is it? Did it trade and close bearish? Yes, it trade above the second candle's high and then close bearish. See price shooting to the downside. Simple. Here we can see that we have a low, a low, a low. Third candle, it traded below this low, but then it closed bearish. So avoid. Let's move forward. Do you see anything? Do you see anything? Here there's nothing. This one disturbed price, so we avoid it. There's nothing. And even this one, guys, I'll just show you on another video. This one is just plain difficult for me to understand and include it in the same video as this one. We will touch it on the next video. Example number 24. I hope everyone is enjoying this video so far, even though I'm sure your brain right now is messed up as with me. So from here we can see that we have a low here. Price sparked this low, but there's no entry. Okay, let's try to enter this one and see if we are going to lose it. We have this low, price traded here and then close bullish. Stop loss will be around this area. This one is just a plain loss. Okay, we lost this one here. So we just move on. So the market will just shoot to the upside and then come to the downside. This is the same pattern we tried here, but then we can still try around this area to the upside. Let's find it. No, yeah, we have a low here, we have a low here, and then price traded below this candlestick's low and then price closed bullish. Boom, market shoot to the upside with a smaller stop loss here. You just enter using only a few candlesticks here. It's pretty much simple, guys. But as I said before, this is just scratching the surfaces of this thing. You have to also include some patterns, some analysis, because this is just something that I wanted to show you for so long. I wanted to share it with my private members, but I just decided, why do I have to keep this information? Because at the end of the day, if you try to join my mentorship, that means I have to start teaching you these things from the start. So it's going to be difficult. At least you'll come to me with some basics so that I don't have to struggle with you. So let's move on. This one is just this area here. This is the Bitcoin on the 4 hours time frame. You can see this one is not even clear enough. This one will be very simple for me to explain. We have the low here, low number 1, and then we have a low around here, low number 2 is this candlestick here. We are talking about this area. And then this is the first candlestick. This is the second candlestick. We have the third one, which is the low here. And then we have the fourth candlestick. This candlestick here, you can see it traded below this low and then closed bullish. if this candlestick made this thing and then closed bearish, that will be a different story. I hope you understand it. And then we can see after this candlestick is this one here. The market never came and traded below this candlestick's low. It just shoot to the upside, plain bullish to the upside, non-stop. This one could have easily failed. You can see here, you can see it. It literally like failed. This one shoot to the upside, but not really too much. But then the market was just consolidating either way. That's why I said you need also some analysis, because you can't just enter this kind of candlestick patterns anywhere in the market. You also need to understand where you are trading in the market. So from here, that means is a no-no. Let's move on to the next example, which is example number 26, the final one. This one here is just an analysis. You see price here. Let me start with the first one. I'll give you an insight here. You can see we have a high, which is number 1. We have a high, which is number 2. And then around this area, this third candlestick here, it traded above this high and this high here. So that means the market is still shooting to the downside. So then from here on, please pause the video and tell me, it's just that I've already made the analysis for you. But if you know how to analyze here, that means you will just trade using these lines only. Nobody will never understand what the hell are you trading, bro. But then please find the number 1, number 2, and number 3. You can pause the video because I think right now you are still tired. So let me just do it. We have the bullish candlesticks high. We have a high, which is number 1. We have another high here, which is number 2. And it did not trade above this bullish candlesticks high. You have to understand that, please. And then on the third candlestick, we can literally see that the market traded above this candlestick's high and then closed bearish. So that is why you see the market shooting to the downside like this. So I guess, guys, this is the end of our video. If you want this PDF, you'll find it in the description below so that you can also practice with it. And then also subscribe to the channel once more. Like the video, smash it. And also, guys, come to our free Telegram. It's just free for you. Weekly market analysis, trade setups, education, and also on our Discord server. I guess I'll see you on the next video. I'm not sure when because I'm still exhausted from making this video. I guess I'll see you on the next one, guys. I love you always. Always use a stop loss. Please use a stop loss before I eat this mic. And also smash that subscribe button. Now, smash that subscribe button. I'm waiting. I'll wait. I have all the time in the world because I've been making this video. Because I'm done right now, I'm excited because you're going to see it. Okay. I guess let's not stop wasting any more time. Bye.